All right, welcome to today's explainer. We are diving right into a single financial event that is so massive, it literally has the power to make investors all over the globe just stop trading. Seriously. Imagine a moment so significant that the entire tech industry is basically holding its breath, waiting for a handful of numbers to drop. Well, that is exactly what happens every few months when Alphabet releases its earnings report. Over $100 billion. Let that sink in for a second, because it's definitely not an exaggeration. We're talking about the sheer amount of market cap that can just materialize out of thin air or completely vanish in literally a matter of hours, all based on what Alphabet announces. You know, when a company is this incredibly massive, its financial health sends actual shockwaves across the whole planet. It's a scale of wealth creation and, honestly, destruction that can redefine global portfolios in the blink of an eye.
But you see, this time, it's kind of different. This isn't just your standard did Google make money selling ads kind of quarter. The real mystery we're unraveling in this explainer is this one huge question. Can AI keep driving growth? Alphabet is placing a colossal, company-defining bet on artificial intelligence right now, and the entire financial world, they are glued to the situation to see if that massive investment is actually generating returns, or if the timeline for AI profitability needs, well, a pretty serious reality check. Okay, let's just dive right into this. We're going to cover 1. The power of expectations. 2. Alphabet's massive AI bet. 3. What investors actually watch. 4. The global ripple effect. And 5. 3 possible future scenarios.
Section 1, the power of expectations. Right, so before we can really wrap our heads around the billions of dollars flowing through Alphabet, we gotta ask, what exactly is Wall Street grading when these numbers drop? Obviously, Wall Street already knows how Alphabet makes its money, so what they're grading today isn't really historical performance. It's all about forward-looking execution. They are using this earnings report, which is basically just a quarterly business report card, to measure the momentum of revenue, profit margins, and most importantly, the company's very own expectations for its future growth. Now what's really interesting here is the gap between the reported reality and the secret expectation. There's a $5 billion difference in this scenario. Alphabet could literally post a staggering $105 billion in revenue, which is record profits, right? And still see its stock absolutely plummet. Why? Because the whisper number, that secret expectation on the street, was $110 billion. Wall Street isn't comparing today to last year. They are strictly comparing reality against their own highly calibrated hidden expectations. It's a tough crowd.
Section 2, Alphabet's massive AI bet.
To really understand why expectations are so incredibly sky-high right now, we have to zoom out and look at the ecosystem itself. Alphabet is way more than just a search engine. It's basically a digital monopoly over human attention. We're talking Google Search, YouTube, Android, Google Maps, Google Cloud, Gemini, products that over 5 billion people use every single day. And the highly profitable ad revenue from those traditional platforms, that acts as a massive war chest, essentially funding their futuristic, heavily capital-intensive bets on AI. And this dynamic perfectly illustrates Alphabet's true moat, the data feedback loop. It's like a compounding flywheel. Better products attract more users, right? Then those users generate way more behavioral data. That data trains vastly superior AI systems, which then make the products even better, capturing even more market share. It's a relentless cycle, and it's exactly why they've maintained their dominance for so long, literally turning raw user interaction into the smartest algorithms on the planet. But of course, there is a massive catch here. AI is expensive, very expensive. Training these foundational models is definitely not like pushing out a standard software update. You need fleets of specialized silicon chips, absolutely huge data centers, and, honestly, gigawatts of electricity. Alphabet is committing tens of billions of dollars in capital just to maintain this infrastructure and stay relevant in this global AI arms race. Section 3. What investors actually watch. So with costs running that high, institutional investors are absolutely not flying blind. They are scrutinizing a scorecard of very specific metrics. They're looking at revenue and EPS, earnings per share, for the core health of the business. But crucially, they're digging into Google Cloud growth to prove that enterprise AI adoption is actually happening. They're tracking CapEx to see those billions bleeding into long-term infrastructure. And the ultimate metric? Future guidance. Because as we know, the market always prices in tomorrow's expectations, not today's reality. And the crucial point here is the existential battle happening right inside Alphabet. It's a classic innovator's dilemma. On one side, you've got traditional search, You know, the familiar list of links with a highly profitable, totally proven advertising model. But on the other side, AI search, direct, conversational answers. They are basically forced to aggressively deploy this incredibly expensive AI product, which has a completely unproven ad model, without accidentally destroying the traditional high-margin search ads that pay for the whole shebang. It's a really tightrope to walk.
Section 4. The global ripple effect. Now, Alphabet's earnings totally do not exist in a vacuum. When they adjust their AI capital expenditures, the shockwaves are immediate. I mean, a single multi-billion-dollar infrastructure check from Alphabet dictates order volumes for chip manufacturers like NVIDIA. And that supply chain reaction cascades directly into global infrastructure and energy providers. It's pretty wild to think about, but one single company's massive AI investment literally supports a vast global ecosystem. Because of this extreme need for computing power, an Alphabet earnings call acts a lot like a macroeconomic crystal ball. It instantly signals the health of so many interconnected industries. We're talking semiconductor manufacturers, cloud infrastructure, networking equipment, data center construction, specialized cooling systems, and even global energy producers. Artificial intelligence's immense need for power means all these sectors essentially move in lockstep with Alphabet spending. Section 5. 3 possible future scenarios.
Let's see how this all builds, because experienced institutional investors, they think in probabilities, not absolute certainties. So we're really looking at 3 distinct what-ifs for the global tech sector. In a strong results scenario, AI proves its value, revenue jumps, and confidence lifts the whole market. Awesome. But in a mixed results scenario, maybe costs outpace those immediate profits, and the market suddenly turns cautious. And then there's the weak results scenario, where slower growth forces a violent market reassessment of the entire AI timeline. Nobody wants that, but it's always on the table.
And that really brings us to a core realization about modern business value. The world's largest technology companies aren't just competing to build better products anymore. They are competing to build the infrastructure of the future. Generative AI is absolutely no longer just some side project. It is quickly becoming the very foundation, the structural steel, really, of tomorrow's entire global economy. Which leaves us with the ultimate question: where is the infrastructure of the future heading next? Every single earnings report gives us just a tiny glimpse into that trajectory. These quarterly numbers are so much more than just a scoreboard. They are literally the blueprint for global innovation. Definitely keep that in mind the next time the market completely holds its breath. Anyway, thanks for joining me for this explainer, and as always, keep questioning what's on the horizon. Catch you next time.